weekend, all. Ira Epstein, and here's your weekend edition of your SPDR ETF stock market wrap-up. And I intentionally waited until we got to about 6 p.m. tonight, as I wanted to see the futures market open, wanted to see the reaction to OPEC on oil. What OPEC did over the weekend, very simple. They said, we're going to keep producing. We're going to go to another 411,000 barrels. We're going to keep upping it. So they'll hold that for a little bit, and then they may kick it up come June, July, August, September, until they're back to the replacing 2 million barrels a day, because there's too many cheating countries. They're not listening to what they say, and they want to grab back share. At the same time, you probably have in the White House President Trump going, yes, that's good. And he'll probably reward them with some armaments that they want to buy from the United States. Now, the next thing, obviously, that's got to be worked on is the Gaza-Hamas deal. If that could ever be worked out, where Hamas steps away, gives up its arms, I believe that you'd even get within maybe a year or so possible recognition of the Saudis by Israel. Don't know. Iran coming under more and more scrutiny, and I think Russia's going to be next if Putin doesn't start listening to President Trump. What's left then is tighten the screws and then say, well, untighten them, just let's end this war. And that's probably your next area there. In terms of news coming in on Monday, we've got the S&P Final Service PMI. We have ISM services at 9. We've got general earnings reports galore. I think there's 600 tomorrow. Remember, we've accomplished a large amount of the S&P, the major companies, the 500 there. And I think I read today 78% beat. That's a pretty good number for markets that you'd wonder, what did they do? Now, the stock markets are lower in early evening trade. You're down about $2 a barrel in oil. That oil is going to come home to roost in the sense of lower inflation numbers. We do measure inflation ex oil and with oil, but that's going to help world inflation come down as those numbers keep falling. That's something we have to look at. It sort of offsets the price increases that kicked in again now. Remember, you're at the first week of May, so you've got a lot of tariffs that are kicking in on autos, used car parts, new car parts. There's everything in the world that kicks in. It's confusing. We all know that. So, as I said, let's take a look at something different. Let's go to AI. And by the way, I left up here for a change for you to see every now and then what I work with. These are different symbols that you can put on Fibonacci lines, drawing lines if you want them on there. You can come in here. We have trading calendars. You can get so much information in our charting service. You don't have to go to 50 different spots. I am a member of other charting services. I like to see what the competition does. I find them so confusing and difficult to work with. These are just easy. To make a long story short, on the C3AI Inc., what you've got is a market that's got lower highs, lower lows. But what we did is we just started a pattern. Now, I want to show this. On this, that's how you have to read it. If I were guessing it, I'd go, I can see the lower highs and I see the lower lows. But when you put on the swing line study, you actually have a difference. You now have higher lows and a higher high. You'll see that on the next chart right here. These are moving averages, weekly ones. I'm making them a little different than I've done in the past so we don't have so much writing on the chart. The 18-week average is in red. The 200-week is this gray line right through here. The 100-week is there. So if AI were to give you a rally, because right now I call this a bear market rally. Why? Because as long as price is under the 18-week average, I define bias from that. When a market's under that average, I have downside bias, or I say the chart has downside bias, and you can get a rally in a downtrend, and that's what I think. Now, that average is going to fall again tomorrow. If you come back on this chart, well, I can't do it on this one. I can probably do it on the next one. I won't even be able to do that. I know what I did. I'm not going to go there. But it's probably falling 25 cents a day or so. As you look here at the Bollinger Bands, the market right here hit the Bollinger Bands for the first time. It immediately moved within them, which is bearish. And now the pattern becomes one clear of higher lows, higher highs, and you see that you're not that far away from getting to that average, and it is going to slip tomorrow. You lost the bearish momentum. So for me, what that does is it says until the market gets under this low, the odds are very strong that price and the 18-day average are going to first come together. It's really that simple. It's a higher probability on the daily charts, but I use this all the time. So I'd be watching that right now. On the CME group, you saw the earnings, you saw what they're doing. Here's a market that volume is just soaring. Their revenue streams are soaring. They keep adding new products, which is great, and these are new highs for the move. I remember when I was eating at the Ceres Cafe years ago, traders were wondering, could it get over 150, then 200? If I were there today, they'd be asking, can it get over 300? The problem is none of us have offices there anymore. I didn't say not all do, but a lot of us don't. That's not the area of the city. There's no trading on the floors other than the Fed fund futures right now. So you've got to go to the CBOE, which is further away at the old post office in Chicago. In Netflix, lower low, higher high, overbought. What do I teach? I teach never to buy over an upper Bollinger Band. Be patient, let the market come back to you. Now, this is a vertical price move. This is a market that if we think about what it did, it ran the Bollinger Bands, fell back to the 18-week average, went back up to the Bollinger Band top, fell back and fought a battle at the 18-week average. So often that's what you do. Came down for a challenge of a Bollinger Band and just went up to the upper band. When that happens, call it a vertical move. You generally catch a group of people, mainly shorts, out of the market. And a lot of people, as you know, wanted to dump stocks. I think that you should have dumped weak stocks. I don't call Netflix weak, but weak stocks on this whole rally. When we take a look at, and there's a way to replace on the brakes. On MCHI, higher high, lower low. I call this trendless at this point in time. Then we come to Home Depot, and it's another market in a bear market rally. Why? Again, you're under the 18-week average of closes. That means the bias is down by my definition. You got on the swing line patterns of higher highs, higher lows, and you're correcting an oversold condition. It never embedded where it locked in all this. This is an embedded look. When you get that, and both the lines are going over the 80 level for a certain period of time, it often is accompanied by markets giving you a run. But this market has refused to give us bearish embedded readings, and I find that interesting. So we'll see. This is your spring, summer season. I've been going to Home Depot. I'm starting to count how often I'm going now as I'm doing my spring projects at my home, and it's crowded. So I bet their business is picking up. Again, I look for the resistance at the 18-week average. In Uber, you're up to the upper Bollinger Band. So if you haven't taken money off the table, this might be a very good area to consider it. Support's all the way back, probably in the 75 area, as this moving average is going to jump a bit tomorrow when the market reopens. You are overbought. You're at that band. You have a history when you get to that band up there that the market tries to give you a pullback. That's what I'm saying. Could it keep going? I didn't say come out of all of it. I said maybe some of it. I don't see anything bullish on KRE. I see the regional banking getting a small lift here. The resistance begins at the 200-week average up to the 18-week average. The momentum never embedded. You're correcting, present tense, correcting an oversold condition, and that's about all that I'm seeing right here. Even if you went up and you took out 59.16 and made a higher high, you'd end up with a lower low, higher high. That's not what I'd call a bullish formation. XLI, the industrials, have to prove that they're not going to pull right back into the 18-day average. They've got to actually prove it this whole week. If one were to buy it there, I don't like that you'd have to risk to 121.14. I think it's too much to risk in the chart. It either pulls back or you do nothing. The pattern is one of higher lows, higher highs. You turned a bear market rally into bullish bias by closing over that. Now it's got to prove it early on. In XLE, what this market did in energy is it fell back to this right through here, the 200-day average and here. Now, you had an OPEC meeting that was to take place Saturday. Nobody knew what they would do. Now they've told you what they do. They want to get back to 2 million barrels. If Kazakhstan, Iraq, other countries that have been producing more than their quotas want to keep going that way, they're going to turn on the spigots. Even Russia joined in on that. Russia needs money from the war. So Russia has gotten itself back into compliance, and they've joined in with saying, yeah, let's go get market share back from these countries that are cheating. You do remember that oil went down to zero during the last spate like this. That one was between Russia and the Saudis. So I don't want to see that again, but I'm looking at this here, big resistance. This market's, I think, going to fight a battle at the lower Bollinger Band. The dollar index has been beaten up terribly. I went to dinner with one of my really close friends today, and he's leaving for Europe in 3 weeks, and he's going, yeah, the dollar's great. I said, what's so great? Because he hasn't kept up with it. I said, it's down 10% just this year. And he goes, what? I go, yeah. I said, but didn't you buy yourself a lot of euros last time you were there? And for him, a lot is a lot. He said, yeah, take them. They're worth more money. But, you know, he's going to visit. If they're only Poland, I don't know if they'll take the euro. That's the interesting. I forgot what countries he's going to. We never got that far. But you can see right here, fighting a pretty big battle. I would look for that to be the 200-week average, to be the resistance. You're still embedded. Nothing has turned bullish on this chart. In the gold market, you lost the bullish embedded reading on the weekly chart. If it doesn't re-embed by Friday off the weekly chart, odds are before you go back over 317.60 something, but the high that it made, that price in the 18-week average will make a run at themselves. In copper, this is a bear market rally now. I think the pros went heavily short on Friday, and I think they're going to just keep tight stops over 39.63. If it takes that out, I think they'll come out, and if it falls back, they're going to look to see can the market come back down there. That's what I think the pro trader was doing. That's how the news comes in for me, and then I have other charts that I work with on this. I want to remind you that I put up a special report for you. Just go to our website, IraEpstein.com. It doesn't get any simpler than that. IraEpstein.com. See this right here? Give that a click. The report's only going to be up through Tuesday, I believe. So you want to look at it now. I give you in it, looking at the 5, the 15, the 25-year seasonals as to what the stock market does from right now into the summer months. I then cover SPY, looking at that. I cover the S&P, looking at that. I look at the weekly and daily charts for you, and I give you price counts. And that's where I think you want to come alive on this, are the price counts, seeing what they're also doing. So all of it together, just simply go up there, give it a click. If you're already a paid subscriber with mine, it'll be also in your member login area. I'm Ira. Have yourself a great evening. I'll catch up with you all Monday morning in my other videos tonight that I'll record right now.